What up, what up, what up? Hey guys, I'm back. What am I going to be speaking of in this video? In this video, I'm going to give you kind of I don't want to say like a step-by-step guide, but essentially a guide on how to go ahead and buy your first home. Well, let's start off with why I believe everyone should buy a home. I honestly think it's one of the best investments you can make. Why do I think it's the best investment you can make? It's because, so when you go ahead and buy a house, there's two components of the house when you go ahead and purchase it. There's a down payment, which is the initial money you go ahead and put up, and then there's a mortgage. So what's a mortgage? A mortgage is basically, so let's say you buy a house for $300,000, right? And let's say you put down $40,000. The bank goes ahead and lets you borrow the remaining $260,000, and they let you pay it over 30 years. So now why is this good? I believe this is the best investment you can go ahead and take, because over the 30 years, you're going to own this house one day. So that house is going to go ahead and be free and clear. So what does that mean? That means, let's say for example, you buy your house at 25. By the time you're 55, you're going to own a home that has no mortgage on it. So now you're basically living for free. You know, you still have to pay your property taxes, insurance, and all these other things, but you're essentially living for free. Why is this important? Because you don't want to pay rent for the rest of your life. Rent is a very poor financial decision, because you're giving away money to, you're giving away money to an owner that's going ahead and getting rich off of your rent. Now, I'm not saying rent is a bad thing, because rent is it's a very good way to start, but you should always want to go ahead and work towards ownership, because you owning a house, no one can get you out of your house. It's your house, so it's very important in my eyes. Okay, so now as far as like a step-by-step process, first you're gonna need credit. Okay, so now if you've noticed my other credit, if you watched my other credit video, why is it important to have good credit? Because it can be the difference between you borrowing money at 4, 5, or 6%. If you have a low credit score, because banks will approve you for a mortgage after around 650 to 680, but you're gonna pay interest of like 5 or 6%, right? But let's say you had a 720, anything north of a 720, 750, 800, banks let you borrow money at like 4%. I've already showed you guys in the other credit video how to like figure out interest rates, so take a look at that one if you haven't. But you can see over 30 years, that money really adds up. It can be the difference between you paying an extra 30, 50 to 80, $100,000 even in interest. So yes, it's important to have good credit. Next, you're gonna need 2 years of tax returns. This is why filing taxes is important, because in the system, you're kind of basically showing them and proving to them that you make this money, because banks aren't going to go ahead and let you borrow $240,000 if you can't pay it back. So by you filing taxes and showing them like, hey, listen, I made $50,000 this year, and I made $50,000 the year before that, and I work for X company, they're like, okay, well, it seems like he's a very responsible, hardworking person, so it makes sense to go ahead and lend him the $250,000. That's the second part. So remember, credit, credit and tax returns. Now the last thing, I honestly think this is the most important part, and it's imperative that you never, ever, ever buy a single family home. Or at least not for your first property. Now, why is this important? This is important because so people consider your home an asset, right? But to me, in my eyes, an asset is something that puts money into your pocket. If you buy a single family home, that means you have to work, you have to go to work, get the money you make from work, and then use it to pay your mortgage. So essentially you're putting money in your pocket from work, but then the mortgage is taking it out. So to me, that's a liability, because the house isn't making you money. If the house does not pay for itself, or at least break even, or like covers most of its expenses, it's not an investment for me. It's a waste of money. You should not tie yourself up into that bind, because if you're gonna go ahead and put yourself in debt for the next 30 years, that house better make you money. Like, if not, it makes no sense to buy a house. The problem is, a lot of people, when they go ahead and buy their first home, they get very emotional about it. They're like, oh my God, look at this kitchen and look at this bathroom and blah, blah, blah. And they buy this thing very emotionally. But if you go ahead and buy a single family and your mortgage payment is like a lot, you're going to very, very quickly start to resent your home, because you're going to be tied down and trapped in. So what's a way you can kind of swivel out of this? You only want to buy 2 or 3 family homes. Now, why is that? Because essentially, you're going to go ahead and live on one floor, and then you're going to have 2 other tenants or 1 other tenant, depending if you buy a 2 or a 3 family. But now your tenants are going to go ahead and pay you rent. So remember how I gave you in the other example that, like, oh, you paying rent is basically making the other person richer? Now you're flipping the script, because you're the owner, people paying you rent is making you richer, because they're contributing to your mortgage. So now in the example, right, you have a $2,500 mortgage, and your tenant's paying you. So remember, you have a 2 family. So one of your tenants is paying you $1,500, and you're living in the other floor. So now that $2,500 mortgage is being helped by the $1,500 in rent that your tenant brings in. So yeah, you're making money, and it's taking some money out of your pocket, but instead of, let's say for example, you had bought a single family and you took out $2,500 automatically from your pocket, you're only taking out $1,000, because your tenant is paying off some of your mortgage. So now, why is this good? Because let's say in the example of the single family, if you lose your job, then oh crap, I can't make my mortgage payments, I can't do this, I can't do that. But if you're in a 2 family home, once you go ahead, let's say you lose your job, God forbid, but you still have the rent coming in from the second floor tenant. So then it's like, oh, okay, like I have some money in, and so this is why my ideology is that you should never buy a single family home. It's always should be 2 or 3 families, because the chances of you and your tenants all losing your job at one shot is very unlikely. So it helps, again, God forbid you lose your job, but my job is to like look at the worst case scenarios. Because remember, this is an investment. Like, you're not buying a house because, oh my God, like the kitchen's so pretty, or like the bathroom's so pretty. No, this is an investment. Like, that's why a lot of people got into trouble, because they were buying on emotion, and then they weren't really working out the numbers. And then when their mortgages came, they were like, oh, how am I going to be able to afford this? And unfortunately, a lot of people fell into foreclosure. But again, I'm just kind of showing you what I've seen. I've kind of been doing real estate for like the past 4 or 5 years of my life, and I've come into situations, where people, a lot of them were just buying on emotion, and they didn't really know what they were signing themselves up for. So I kind of just want you guys to avoid these pitfalls that these people had to go through, because it's not easy seeing someone go through foreclosure and seeing them lose their home. It's actually a very terrible experience. But if you buy real estate correctly, 2 or 3 families, like, it can be very, very lucrative, because so now let's go back to the example of the 2 or 3 family. Remember, in 30 years you're going to be done paying this house, right? So then remember, in some of my videos I go ahead and say 50-year-old you is depending on the decisions that 20 to 30-year-old you makes. It's because once your house is completely paid off, and your tenant, because remember, your tenant still helped you pay off your house, but by the time you're 55 and your house is paid off, you're still going to have that other apartment. So what's going to happen? You're going to have an extra just $1,500 coming into your pocket. An extra $1,500. You don't need Social Security. You don't need Social Security. You don't need IRAs or 401ks, because your rental real estate is going ahead and putting money in your pocket. But now remember, this is all under the assumption that you only buy one house. So now imagine if you pick up 2 or 3 over the course of your life. We're talking about in excess of $4,000 to $6,000 a month. It's, again, it all depends. on you and what your goals are. Um, I'm just, a big believer in real estate, so I'm all into this. Perfect. So now that you understand these three concepts, the last component is the mortgage. So now why did I ask you to have a good credit score and your last 2 years of tax returns? It's because you're going to go ahead now and go to a mortgage broker. And what a mortgage broker is, it basically goes ahead and reaches out to a couple of banks, and they let them know that, hey, this guy's interested in buying a house. Here's all his paperwork. They're gonna ask you for other documentation as well. That's like how much you spend a month and all these other miscellaneous items. But essentially, what a mortgage broker is gonna help you do is kind of find the best rate for you. So I do recommend going through a mortgage broker. They take a fee, but that's all like added into your mortgage, so it's not too much. But it's definitely worth it. They're gonna they fight on your behalf. They're trying to go ahead and get you the best rate possible. So it's also saving you money at the same time. That and let's see. After that, the reason you needed to also understand the multifamily concept of this is because, so for example, right? Like let's say you go ahead. Let's go back to our example of the tenant paying us $1,500 on the top rent. So when banks, let's say you make $50,000 a year, right? And banks know that, hey, you're buying a two-family, so the rent over there is going to be $1,500 a month. Banks will actually add those $1,500 a month to your income. So let's say 1,500 times 12, they'll add an additional, I think it's $18,000 a year. So instead of you making $50,000 a year and only qualifying for $500,000 worth of house, they'll go ahead and say, now you make $68,000 a year, and now you qualify for $600,000 to $700,000 worth of house. The reason banks do this is because they understand real estate is very stable, and they lend out a lot of money to people on real estate. You see all these big buildings in Manhattan and Queens and all that. That's all. None of that is paid for in cash. Most of that has a huge mortgage on it, and banks are more than willing to give you a mortgage because they know, like, listen, people need a place to live. So a lot of people don't move very frequently, so they know it's a very stable and reliable source of income. So that's why they're more than happy to go ahead and lend you more on it. So then once you have all of this, like I said, you'll go to your mortgage broker, and your mortgage broker will call around a couple banks, and you'll eventually get approved. And you're going to receive something called a pre-approval letter. Once you have a pre-approval letter, you can now start shopping for real estate. This is where, you kind of want to reach out to me so I can kind of help you see what you want to look for, certain aspects. The problem is anyone can be a real estate broker, but not everyone's a real estate investor. And there's two distinctions between that, because to become a real estate broker, you really only have to go ahead and take a test, and you can start leasing up apartments or selling people houses or whatever. But to be a real estate investor, you have to actually, put up your own money, really invest. And I don't know if you guys most of you guys are coming from my Instagram, so I just recently finished buying a 3-family with my cousin on Friday. So, I've also been investing in real estate for the past 4 years, so I can speak from an investment perspective and kind of seeing what home buyers have been up to. So feel free to reach out to me once you do get a pre-approval letter, or even if you're applying for a mortgage and you're a little bit confused about the process, feel free to DM me, guys. I'm an open book. I'd be more than happy to answer any of your questions. But again, once you do get approved from a mortgage broker and you get your pre-approval, that's basically when you can start shopping for a home. And again, remember, it's imperative that you buy a 2 or 3 family home. Do not buy a single family home. You are going to resent it. Please, please. If there's anything that you can go ahead and take away from this video, it's to buy a 2 or 3 family home. If you could buy a 4 family, that's even better. But that's basically the entire process. Then once you pick your house, you go into contract, you put a down payment. That's going to be cash up front. That's your cash, because the banks will only let you borrow, I believe it's 80 or 97.5%, depending on the loan you go ahead and get. There's different kinds of loans. Just to quickly go over some loans, there's an FHA loan, there's a conventional loan, and there's interest-only loans. Don't go after interest-only loans. By the way, another super, super key term, your mortgages, you always want them to have a fixed rate. You never want them to have a variable rate. The difference between these two terms is a variable rate is it's what the interest rates are at the moment. They may be lower than a fixed rate, but variable rates can go up and down whenever they want. The good thing about a fixed rate is, let's say if you get a rate for 4.5%, that's it. You're paying 4.5% for the next 30 years of your life. It's never gonna move. And that's another super important key. Make sure to get a fixed rate, always fixed, never variable. And yeah, guys, after that, you kind of got to start looking for a 2 or 3 family. Feel free to reach out to me. I'd be more than happy to be your broker and walk you through that. And at the closing table, hopefully you might inherit some tenants, which is good and bad. You kind of want to go ahead and they'll give you like a background on the tenants you either inherit, or you can go ahead and buy a house that's completely empty too. Both work. Because if you do buy a house that's empty, then you could just hire the real estate broker to go ahead and find you tenants. And I don't want to say you always want to go through a broker, but for the majority of the time you do. The reason you do is because you don't want to go ahead and rent out to some randos. You want these people to have 700 credit scores. You want to verify their income, because remember, this is an asset. You don't want to rent out to someone who's not making any money or is completely unstable, and you never know if you're going to go ahead and get your rent. Because remember, you bought a 2 or 3 family, so these people can help you with the rent. You're not, they better pay you rent. Listen, I'm not going to say that you're never going to go through an eviction in your life. I want to be completely transparent and honest with you. Listen, it happens, but, everyone has a bad day at work. Everyone has bad days. Listen, nothing in life life isn't perfect. So I'd rather go ahead and deal with these little headaches knowing that by the time I'm 55, this thing's going to be completely paid off and I'm going to be chilling. So it's worth it, guys. Listen, multifamily real estate is very, very lucrative. So I strongly recommend it. And listen, at the end of the day, everyone needs a place to live. And if you wake up by the time you're 55 and you've been paying rent for the past years of your life, just do 1,000 times 12 times 30 years, and you'll see how much money you just gave away in rent. Remember, this is all money that can be going towards paying off your house, building up equity in your home. And, you don't even have to sell this house. Think about it. You realistically don't even have to sell this house once you go ahead and pay it off. You can just pass it down to your children. And now your children literally would never have to pay rent in their life. Or you can go ahead and tell the people upstairs to go ahead and leave and just give that apartment to your children. Give your next generation a level up, Listen, this is building wealth. This is creating wealth for you and your family as well. Because I don't want to say real estate prices always go up, because they don't. They go up and they go down. It's kind of like the stock market. But to me, as long as you have your numbers calculated, like this is how much I'm getting in rent, this is how much I make a month, so I know I'm going to be able to cover the mortgage, that's all that matters. You only got to worry about paying the mortgage. Don't worry about the value going up or down or none of that, because trust me, by the time you're 55, the value of your house is going to be a lot higher than when you bought it. So that's all, guys. Thank you so much for watching. I really do appreciate it. I never really thought that people would kind of care about these things, but once I realized that there was such a lack of financial education, a lot of you guys reached out and just started asking a whole bunch of questions. So I really hope I kind of did my best here on elaborating on some of the key terms. I'm probably going to write a whole bunch of more information down in the description section below to elaborate a lot more. But yeah, guys, again, super thank you for watching. Feel free to DM me. Don't be scared to ask. Listen, guys, I'm no better than any of you. Most of you went to high school with me, so you know that I'm just a regular kid from your school. All I'm doing is just playing Monopoly in real life. And I'm just sharing some of the information that I've picked up along the way. Just trying to help you guys avoid some of the mistakes that, I've seen, and I've learned to go ahead and dodge. But again, super thank you for watching, and see you in the next video. Take care.